All right, so I'm just going to say this, and then I'm going to say goodbye to everyone listening. I don't know if anything I've said has made sense because I've been at a block party, and that's where I'm going back to.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Welcome to the Money Path Podcast with your hosts, Bob Iacchino and Mike Arnold, founders of Path Trading Partners. It's a block party kind of show this week. Make sure to go to pathtradingpartners.com and check out Motive Wave for your 14-day free trial. So we are going to join Bob and Mike with a conversation of news and the markets.
On a Saturday afternoon with the markets closed.
Listen, I'm just telling everyone, we normally record these things on Friday. And today we're recording on Saturday in the middle of the block party in my Pilsen neighborhood in Chicago. So I'm a little, let's just say, under the weather.
It's hot out there. You were drinking alcohol.
It is so hot.
You were not drinking alcohol in this kind of heat, were you?
They got tents, right? So there's like tents and there's tents.
They're building cars in those tents?
We're back to Tesla.
Oh, no, it's all over the place.
I was wondering if those were past tense or present tense.
That's a very morning zoo type of a joke, Mike.
Okay, well, that's what we've been accused of.
Can we talk about the jobs number?
Yeah, I think we should actually talk about the jobs number. What's your take on the jobs number that came out yesterday, because we're recording on Saturday?
I've been calling the jobs number strong enough. And I guess what I mean by that is the headline was 157,000, 192,000 was expected. So that's a miss of 35,000. Interestingly enough, 35,000 were added to the June payrolls. So the exact number that the headline missed by was added to the June payrolls. And on top of that, Toys R Us closed last month and laid off 31,000 workers. So the headline number was the only weak part about this. There was nothing exemplary about this particular jobs number. It was all basically as expected. Manufacturing and construction jobs were a strong point. Manufacturing jobs added 37,000. They were only expected to add 25,000, and last was 33,000. Construction jobs added 19,000. There was no forecast on that. So the areas where people thought the jobs were kind of lost, where you couldn't get them back, there's been some really good growth on. Average hourly earnings month over month matched the forecast, plus 0.3. Year over year is still plus 2.7, so no movement on that. Hourly work week was a tenth lower than last week, but came in as exactly as forecast, 34.5 versus 34.5. And the participation rate, 62.9. Last month was 62.9, so no change in that. The unemployment rate, 3.9 versus 3.9 last. So the jobs number was in line with expectations. So that basically means as strong as expected. That does not derail the Fed. It does not slow the economy. It doesn't change any narrative on economic growth that's kind of been in play.
Oh, we knew it was going to miss?
We what?
We knew it was going to miss, though.
What, the headline?
Yeah.
Well, I mean, if you just subtracted Toys R Us, you
we knew it was going to miss because Trump didn't tweet about it.
Oh, yeah. It's funny. I saw a tweet immediately after the non-farm payroll. Trump does not tweet. We don't get a beat. That was the rhyming thing that was going around right after. So just so you guys know, if Trump tweets, of course, this is a joke. If Trump tweets before the jobs number, it's going to come out stronger than expected.
Well, we have three data points now, so we can make a very sweeping conclusion from 3 data points.
Sweeping conclusions from limited data. We've talked about that our entire careers.
That's how we come up with all our trading methodologies.
Yeah, don't do that. But after the non-farm payrolls came out, like the dollar index was 95.15, went down to 95 even, and then popped back up almost unchanged, 95.08. Dollar yen, which I look to be sort of a flight to quality, whether it be economic or otherwise, was 111.49, dropped down to 111.44, and then came back at 11.48. So that's no change. The S&P was about 15 basis points, a little bit less than 0.2%. It went down to 0.04% higher, and then went back up. Same thing with the NASDAQ. Essentially, they all dropped and then went back up, except for maybe the Russell. And the 10-year note was at 298 and went to 296 and kind of hovered there the rest of the day. So that's like sort of where I get it was strong enough, because there was no market reaction off of the jobs number really at all.
Well, there you go. We still have like massive shorts in the treasuries too. So I wonder what's going to happen with that eventually. Massive shorts. Short side interest is huge. We didn't have a podcast last week, so we really have to touch on the Fan Mag T. I throw Tesla in there too, because you got to buy every dip. I took so much crap for that over the last few days. Oh gosh. But we should actually touch. Last week we had Google. They reported. Let's see, Q2 revenue ex TAC, $26.24 billion.
Wait, ex what?
TAC, TAC.
What is that? What is ex TAC?
What do you mean? You don't know what a TAC is?
No.
It's I don't know. It's acquisition costs, traffic acquisition costs.
Traffic acquisition costs.
Yes.
Yeah, I don't know what that is. That's like internet stuff. Look at real companies. Go ahead.
Well, you can't not call Google a real company.
I don't know.
So they beat on the revenue. They let's see, adjusted EPS 11.75 versus expectations 9.66. A bunch of stuff was up. It is actually sold off pretty much back to its daily rotation zone. But that one, it's rotating up again. So, but a little sign of extra weakness. Although they posted really good numbers. Now Facebook,
Yes.
the leader, because they're the F of Fan Mag T, whatever it is now, they dropped from 218.62 all the way down, and I'm going market hours, after market hours, they actually went worse than this. I'm just doing they went down to 166. Now they're recovered to 177. But if you miss at this point, wow, holy smokes!
And the market beats you up even if you don't miss, and that's a very negative sort of an undercurrent to the market right now.
They now see Facebook second quarter earnings per share. They did beat 174 versus estimates of 170. Second quarter revenue 13.23 billion versus estimates of 13.33 billion. So they were slightly missed on revenue, but they were up 42% year over year. And then you have the MAU and the DAU. So what's the MAU and DAU?
I don't know.
Come on, Mr. Internet.
Should I know that?
MAU's monthly average users and DAU's daily average users. So
again, this is internet stuff. I look at real.
That's the way they look at Facebook. What can I do? So their monthly active users missed 2.23 billion versus expectations of 2.25 billion. Daily active users missed 1.47 billion versus 1.48 billion. So that missed.
I know I sound like an old guy here, but at some point they're going to realize this advertising model, and it's probably still 10 years away. Nobody looks at social media advertising. At some point they're going to realize that.
What do you mean?
They can't quantify it. It's like everybody advertises on social. They've got so much of their revenue from advertising.
Would you rush out and buy Facebook yet? It does not have a bottoming pattern. It has a huge gap behind.
No, I would not rush out and buy Facebook. But Facebook, the sell-off is overdone. It's repriced, and so it's repriced to where, the CFO came out in the conference call and said we're going to lose high single digit in net revenue every quarter for like the next 48 quarters. And so they repriced it, and that's what happened. And from there, you have to say, does Facebook grow? And I think the resounding answer is yes. Now that it's been repriced, it grows from the new price. So yes, I would buy Facebook. I don't know that I would buy it Monday morning.
I'm just waiting for a bottoming pattern.
Yeah, I would buy Facebook.
Something else got repriced?
What?
Twitter. Now, they actually didn't have bad financials either, but they purged all those accounts. And
yeah, I lost a lot of followers. I got very upset.
So a decline of 1 million. And see again, Twitter MAUs. MAUs dropped from 69 to 68.
What is MAUs and DAUs?
Monthly average users and daily average users. It had a really nice run up. It got up to the 47 area. Now it's back down to 32. It's forming actually lower price action patterns. It's not even, at least Facebook's somewhat stabilized, at least for now. Twitter is actually not going, it's forming a little rising wedge, but right into the declining 8. It looks like it's going to head lower. So wouldn't go and jump into Twitter. Now, here's one we got to talk about. Amazon.
Taking over the world.
Amazon. Well, it even dropped after another one reported, and it pulled back. So revenue, $52.88 billion. Analysts were looking for $53.35 billion, so it missed slightly on revenue. Earnings per share. This is weird though, because they reported 507, but Wall Street had projected at 249 a share. But that something's off with those numbers. I don't know. But people weren't entirely happy with Amazon. It's pulled back nicely to it actually pulled back a few days ago to a nice slight bottoming pattern, retesting prior resistance, becoming support and rotating back up. So we're going to have to see if this rotation holds, or if we break below, just telling you, everybody, if we break below about 1730, it would not be good. We then be expecting the bigger pullback in Amazon. It's come pretty far, pretty fast, though.
Yeah, it has. I mean, you're looking at a stock that, of the 26 big name analysts that cover it, 15 have it as a buy, 10 have it as neutral, and 1 has it as a sale. So it's just extremely popular. There's a long wick on that last move on Friday. So I still think Amazon's a buy just based off of what they're doing. But again, I think this as well. I also think there is no reason to rush in and buy Amazon. If you were to buy Amazon on new all-time highs, which would be what? Above I don't know, what's the all-time high? 1880, somewhere around there?
1880.05.
Okay, so 1880. If it breaks out above there and you buy it on the way up, are you really upset if it only goes to 2,000? It might be prudent to kind of wait. You settled at 1823 and change on Friday. You're losing $50 on the stock, and if you're buying the stock, even with leverage, you're not buying a lot of them. So, I'm really. It's probably been 5-6 years before I've been afraid to buy Amazon.
Now another one in the fan mag T, whatever it is, Apple
looked good.
So what's your take on Apple?
Well, they had a huge software as a service jump. And I think that's really where we got the jump from. I mean, 31% jump in the segment in March in terms of revenue. iPhone's disappointed a little bit, but they still beat on EPS. They still beat on earnings. They missed on iPhone sales versus analyst expectations, but they still sold 41 million iPhones.
They missed on Mac sales.
What's up?
They missed big on Mac sales.
Yeah, they missed big on Mac sales. It wasn't insignificant on Mac sales. But also the 31% jump in software as a service, if you just do the math from a revenue perspective, more than made up for that. So I think the rally in Apple is justified. But if anyone thinks like Apple is suddenly going to become a service company, I don't think so. I mean, after you talk, Mike, I'd be interested in Stafford's take on it because it's kind of his bailiwick.
Well, that's what I was. They missed sort of big on the Mac sales, but they missed on iPad and iPhone. So,
Tim Cook likes spreadsheets and he likes numbers. He doesn't like bossing engineers around. So they're making a ton of money selling music subscriptions. They're making 30% selling apps. I mean, they're just making hand over fist money on their ecosystem by just skimming off the cream, which is great. They give dividends. Fantastic. It's the new biggest blue chip stock, right? But man, they don't give a crap about the Macintosh. They just don't care.
Well, it's great for the shareholder. It's not great for the Apple user. Is that what you're saying?
No, I mean, Apple's always, we know what to do. We're just going to hold on to our machines for 6 years. The operating system's fantastic. The wearables are fantastic. The phone and the phone operating system is fantastic. I mean, this podcast is run off of the Macintosh and the Mac operating system. We're all happy with that. But they're just a couple key products we need to satisfy, to get us to go through that update cycle. When the Mac was how they got their revenue, the upgrade cycle was very forefront in the conference call. Right, we were 18 months until the next upgrade cycle. We're 3 years in. They have their Macs. We got a new Mac. They don't even talk about that stuff anymore.
Yeah.
And the new Macs that are out, have some significant design flaws to the point of class action lawsuit bailouts. Oh my gosh, we're going to repair them for the next 5 years. But man, if they can just get these couple products out at the right price point, they're gonna get that Apple user down in age, right? That's the real trick, Not every kid can blow $3,000 on a computer. Or they're just going to buy a used Mac somewhere.
Yeah, that's one of the things I've looked at.
And Apple should be getting a piece of that market. That's it. They're totally failing in my view. But for an investment, they'll be up there with Tesla as the first $10 trillion company.
Don't start with me.
I can go toe to toe. Just you bring it on.
Which movie did Yoda say, "Do or do not, there is no try"?
That's Star Wars. Star Wars is terrible. No one likes Star Wars anymore. Don't talk about Star Wars.
Was that Star Wars? Which one was that? Where Yoda said, "Do or do not." Actually, it's our first introduction to Yoda. Which one was that?
It's Empire. Yeah, right.
Empire Strikes Back?
Yeah.
On
Dagobah.
That's enough on Star Wars. We're done.
Yeah, we don't talk about that anymore. It's ruined.
Please leave that in the show. That's terribly funny.
It will. I got in the thing on the Tesla Twitter account where they realized that I don't have a long and I don't have a short, and they're like, "Why are you here?" And I'm like, "Well, I'm here for the memes." And the last thing the last activism was boycott Star Wars, and they kind of all backed off me, going, "Oh no."
He's one of those guys.
Who's this guy?
This guy's aggressive. We're afraid of him. Well, they ruined the fucking Han Solo movie. They could end Tesla's whole career.
Yeah, if you sank Disney on Han Solo, he's gonna be. Well, he can't send you shorts.
Like, I know we do too much on Tesla. I understand. If anyone's listening to this podcast and they're like, "Oh my God, here we go on Tesla again," he's just insane. I mean, the stock jumped 7%.
7?
It was more than 7?
Oh yeah.
Yeah, it was like up 15%.
I mean, that is insane.
Everybody emptied their piggy bank and said, "We're gonna burn the shorts. Let's go, kids."
It's asinine.
It's actually valued at more than GM again.
I mean, it's just the worst company I've ever seen.
Are we keeping you up? Are we?
You said that was yawn. It's just the worst company I've ever seen in terms of how it's run. And I'm not, I say this on TV too. I'm not smart enough to run an auto manufacturing company. That's why I don't.
I'm sitting back with popcorn ready for this to melt down.
He's caveating everything, because here's the odd thing about me, because they kept stressing, we don't need to raise capital. We don't need to raise capital. Actually, you do, because your accounts payable are 81 days now behind. You'd be pretty much bankrupt if you paid off everybody. You have all these liens against your company now. And you've never had a problem raising capital. Why aren't you going to raise some capital? There's no reason not to if they could. They can't for some reason, or they don't think they should for some reason. It's just scummy. So I'm just warning people again. What's interesting to me is the stock price started reflecting in Enron and WorldCom way before it started reflecting in Tesla. There's even more people buy every dip. See, you just buy every dip and you load up on even more because it's going to 1,000. And at some point, this stock's going to take a massive hit. Now, we put on our YouTube channel before earnings, the short pattern we were watching and working with came to full target, and we didn't have a pattern either way going into earnings. So it was like, okay, there's nothing going on here. We can't trade it.
When the people on Twitter and everybody else, it's like, you can love the car. I mean, initially the car started off with really good reviews, and some of those early Model S's, beautiful cars, everything was great. He has not cracked the code on how to run a manufacturing plant, and I don't know that he will.
He doesn't want it.
I don't know why people think that's some sort of insult to him and his family and them and their families.
He hasn't figured out how to run a company profitably.
Well, I mean, he's theoretically run other ones. I don't know that he ran them.
He never ran them profitably.
I don't know that he ran them. I'm just saying that, this is a manufacturing business, completely different than anything else he ever did. And he tries to call it a tech company, and it's not.
Yep. So
he's going to build these things somehow outside of a tent.
It's because it's beyond you love the Mac or you love this kind of music or whatnot, right? These people who are into this have a political stance.
The truth. I mean, they attach their own self-worth to it.
We're saving the planet.
By
buying a car you can't live with.
How was GDP? Was that any good? It's an age of lettuce.
GDP came in slightly less than expected, 4.1 versus expectations of 4.2.
I love how they changed that because, literally, it changed the day before to expectations of 4.2. The whole time I was watching that, the expectations were 3.6, 3.7, 3.8, just kept creeping up.
Well, it creeped up and then it slightly missed. But and the Fed,
really good number.
The Fed held the rates unchanged, said the economic growth rate is strong.
I'm one of the people saying that the Fed actually changed a significant part of the statement. There was very little change that didn't have to do with sort of time reference. So, for example, they said instead of economic growth continued to grow or started to grow, they said things like economic growth grew, right? They did a lot of time reference changes to their statement. And the one time reference change they did not make was about the economy going from solid to strong. And it sounds stupid, but that actually matters because I heard somebody say the other day that they mentioned the word strong in their statement 4 times. Doesn't matter because the other 3 were the word strong was in there. It was the same word. They didn't change a word. Right? But literally everything they changed was about tweaking time references. For example, job gains have been strong on average in recent months, and the unemployment rate has declined. Was changed to job gains have been strong on average in recent months, and the employment rate has stayed low. So in other words, not has declined, but has stayed where it declined previously. So it was just a time reference, right? It was nothing else. On a 12-month basis, both overall inflation and inflation items other than food and energy have moved close to 2%. Was changed to, on a 12-month basis, both overall inflation and inflation for items other than food remains near 2%. So last month, they moved there, and this month, they remain there. But the only thing they changed that wasn't a time reference was economic activity has been rising at a solid rate, was changed to economic activity has been rising at a strong rate. That's present tense. I think I'm one of I might be. I think I'm one of those people that is overanalyzing a one-word change on the Fed statement.
But people look at every word and they're like,
I normally don't. But on this particular one, that was the only one that was not a time reference. It wasn't an adjustment of the period of time that something identical to the last statement happened. Just they adjusted the time from is happening to has happened. That was the only thing. I don't know. I should probably take a nap.
That's your takeaway?
That's my takeaway. I should take a nap. I'm just saying they're going to do two more. They're not backing off where the dot plots are. And I think they're trying to get the market ready for that. So that's what I'm saying.
Very good. You know what you jumped over?
What?
Cryptocurrencies. Bloomberg, Bitcoin whales, bad trade leaves counterparties holding the bag. On the dip a few days ago, somebody came in on the OKX's exchange and just went a little crazy on the long side, and they contacted the guy and said you got to start covering it, and then they were gonna force cover his stuff, but Bitcoin got hit pretty hard, and OKX didn't do so well. So we're still recovering from supposedly that, but that's the first time I've that there's been one of these Bitcoin whales, bad trade leaves counterparties holding the bag. So we're starting to the whales. What's going on? I mean, they're trying to call a bottom. So.
Seven sessions in a row down in Bitcoin after a really, really nice rally. That, by the way, Mike called. If you don't watch our YouTube channel, I'm just saying, Mike called a sloppy double, a sloppy head and shoulders on some other ones, and he called the rally. And I'm just saying,
and now I'm saying, sit on your hands. Although with the internet in the video we put out today, potential, and I stress potential double bottom in Ethereum, not triggered yet. Still could go lower, but there is a potential double bottom. We have some slowing momentum, so we're just going to keep an eye on that. Mm-hmm. Actually, now what's interesting is Ethereum is sort of acting a little stronger than Bitcoin at this point. And Bitwise just filed for a first ever crypto basket ETF. The Bitwise Hold 10 cryptocurrency fund will cap weight the 10 largest cryptocurrencies and rebalance monthly. So we'll have to see what happens with that. Although just a lot of weakness in cryptos at this point.
Yeah, it's quite a bit.
Quite a bit. Do you have any why? Because I got a what.
I just want to talk again about my why is going to be about crude oil, which is very unusual for me because I never talk about crude oil on this podcast.
You don't?
But no, never.
Well, last week we had an inside week. This week we had an outside week. What do you make of that?
Crude oil has a big problem because the bottleneck from the Permian. All right, so the Permian is a shale basin in the U.S. Okay, it's the Permian in Texas, and 75% of U.S. production growth comes from the Permian. So if the U.S. grows by 100,000 barrels a month, 75,000 of it comes from the Permian Basin. They do not have enough pipelines and enough rail cars to ship the oil they're pulling out of the ground there to the refineries on the Gulf Coast and to the ports on the Gulf Coast, which is where all the exporting comes from. So there's nothing they can do with it. It's just simply crude oil that sits. And they also are not equipped for storage. So production actually dropped last month for the U.S. for the first time in quite a long time. the production of U.S. crude oil fell. Let me rephrase that. The growth in production fell. So we dropped in the amount of barrels we were adding every month. And that was a big deal because it actually gave a little bit of a bid to price, but there's no fast solution for that. You cannot push crude oil down a pipeline faster than it already goes, which is 11 miles an hour, because if you do that, it heats the product up and damages the product. So you have to put either wider pipelines in or more pipelines, and they're working on that. A couple have been approved. The Keystone XL from Canada, which is not going to help the Permian, but could help crude oil prices, was approved through Nebraska by the State Department. But there's still some lawsuits, but it's one step. And there was some pipeline expansion that was approved through the Permian as well. But until then, essentially, they can't store it, so they stop adding new wells, and we got a drop, 2 drops in a row now in Baker Hughes rig counts. So it's actually pulling the fact that they can't get the crude oil to market that is being demanded is driving the price a little bit higher. Now, we were lower most of the week this week. So it's a little bit different because a lot of it had to do with trade wars and the potential for demand and these builds in the EIA and the API, which I've talked about before, is expected when you see what we saw in refinery utilization. I'm getting in the weeds. I'm getting to where people don't understand what I'm saying. But when refineries are not producing, which is what we saw 4 of the last 5 weeks, where their production was dropping, that means crude oil is building in the storage section of the market. So last week we saw one jump up for the first time in 4 weeks. We saw refinery utilization jump up. So we'll probably see a draw next week. So we'll get a little bit of relief there. What I'm basically saying about crude oil is there's enough pressure on both sides to keep us in this range. We're not going to drop dramatically. We're not going to rally dramatically, except if something dramatic was going to happen in crude oil, it would be to the upside. China said they would not stop bringing in crude oil from Iran, but they said they would not increase it either. So that was sort of their concession to U.S. sanctions. So I just spent 5 minutes saying there's nothing really new.
So your why is there's nothing new, and you talked for
that's my why. There's nothing really new in crude oil. I just want to tell everyone about that pipeline thing. It's very important.
I now learned something.
Yeah, they can't continue to increase U.S. production if they can't get it out of where they're drilling.
I learned about 11 miles per hour.
11 miles per hour. Faster than that heats it up.
I never knew the 11 mile per hour.
Heats up the product. Can't have it.
You can't melt the ice cream.
Can't have it.
So, well, this ties into my what?
Yeah.
Because what do you refine gasoline from crude oil, right?
Right.
And what does a gasoline power?
Cars, jet planes.
A car. And what's a car company? GM. And what pattern do we have in GM that's potentially forming? A very nice double bottom. We need a close above 38.19. Then we'd have stop production target of 39.16, first profit target of 39.64, second profit target of 40.12.
Nice.
So, since now Tesla's valued more than GM, so I mean, because
Tesla's way more important.
Saving the world and going to Mars.
Well, where's GM going?
They used to make locomotives, right? General Motors has their act together.
Well, so yeah. Well, actually, Tesla's balance sheet is way worse than GM's when it went bankrupt. So that's what's interesting. But yeah, potential double. I stress potential, and it is still against the daily rotation zone. But if it waits a few days to trigger, then it won't be. But that's what's interesting. So that's because GM sold off from it was trading up above or right around 45 in the middle of June, and now it's all the way down. And right now it's trading 37.73, but it was as low as about 36.30 earlier.
Mary Barra is running that company better than run that company in 4 decades.
No, I actually think the leadership of GM is doing quite well
Yeah,
now.
Mary Bear is doing a great job. That's not sarcasm. Straight up.
So that's my what. If you're interested in an automotive stock that has a potential to trigger a very reliable pattern, then there. And actually, I'm just looking at Ford. Ford is also doing a potential double bottom. And if that one triggers, it will fill a gap, and it will trigger above the 8 EMA, but it could actually fill the whole rotation zone by coming to full pattern. So if you're a Ford lover, there could be a potential double bottom in that also on a close above 10.11 on a daily basis. So there you go. 2 potential double bottoms, 2 different automakers, both valued less than Tesla.
Yeah, you're not saving the world with either of those, not going to Mars. So there you go. You're not even buying a car if you get Ford. It's only trucks now.
This might be the best podcast we've ever done.
Oh, I gotta cut the shit out of this. Work. Fucking work.
You better work, bitch.
So the moral of the story is for podcasting is Bob should go to a block party.
All right, so I'm just going to say this, because then I'm going to say goodbye to everyone listening. I don't know if anything I've said has made sense, because I've been at a block party, and that's where I'm going back to. So cheers, guys. Thanks for listening. Enjoy your block party.